Alright guys, video on how to trap the early sellers. And in this case we have a very clean downtrend. And we want to catch this move to the downside. So just imagine we're around here now. And you see it's very hard downtrending and you want to catch this move to the downside. So what do you see first? It's breaking continuously to the downside over here. Break of structure. Another break of structure. From there, you want, of course, another break of structure because we are following price action to the downside. What do we also notice? We have pullbacks inside these moves to the downside after the break of structure. So over here, we make the break of structure, we have a little pullback. You can spot the pullback did tap the 0.5, and that's also a reason why we trade from the discounted and premium zones. From there, from this impulse to this impulse, it did another pullback. Again, 0.5, 0.618, which is our golden zone. So what do the early sellers or the continuation traders expect? Hey, another move to the downside with a break of structure. We expect it to sell from this discounted zone. Over here. This would basically be our supply zone. What did it actually do? And I'll also tell you the reason why. It swept these highs. And why did it sweep those highs? Because we have imbalance over here, which is an inefficiency in the market, and the market makers always want to fill that inefficiency in the price action in the market. So this is our imbalance, our FVG, or fair value gap. Also, what do you see? We have a supply zone over here, including an FVG. So this makes our zone more valid. So let's delete this because those traders got trapped. And so also those traders that got trapped provided the fuel for these traders a move to the downside. Because they need fuel. Basically think of fuel in a car. A car needs fuel to move. So price action, a chart needs stop losses, which is their fuel, to generate a move to the downside. And this was very clean. You can mark out this out as your fake change of character because it did not fill this imbalance. And so this is our fake change of character. Let me see this one. This is our fake change of character. So what can we expect after seeing a fake change of character? A sweep of these highs. And also these highs were pretty much double tops, which is also liquidity. I'll do it like this now. So which is also liquidity. So how could you actually enter this trade? And I always say price action doesn't always have to fill the whole imbalance. But here it was just pretty clear it was a fake change of character, and you basically only knew that when it fakes it out. And this is valid to trade if you get another confirmation in here on, for example, in this case in the 1 second, then you can anticipate on the sell because then you're more certain, you're more certain that it will hold. And in this case, it didn't do that. So basically, this was a real change of character. Because if you follow price action, like this, fake change of character, but we made a new low. Then we swept this high, started moving to the downside. And so basically you can mark out this as a change of character or simply this one. So you could catch it on two ways. So if you mark out this as your change of character, then you of course wait for a pullback. Where do we wait for? For this zone to get filled. As you know, it's also a premium zone. From there, I can replay to there. We can go to a 5 or to a 1 second. And like I just said, you want another confirmation in here. And that confirmation can be, for example, a change of character, a double break. As you see, it filled this, and when you're already on the 1 second, you could easily say, hey, I wait for this 1 second break over here, put my entry when it breaks, and put my stop loss just above. And of course, you want to target these lows. As you can see, it's playing out very well. But if you were waiting for another break, you could also take a re-entry on this. Let's mark this out now. Let's see, a break of structure. If you want to be more certain on your trades, you want to have a higher probability of taking a win, you simply have to wait a little bit longer to wait for more confirmation. But also, it brings a chance you will miss out on more trades, of course. From there, this is our premium zone. From 0.5 to the 1 again. Let's see what it does. Let's go a little bit faster. And now it seems like it's gone, but it left a lot of imbalance, so it can always come back. Let's do 10. We're still waiting for the zone. It can still get filled. And now it's gone because it broke this low and you simply don't want to be in a trade anymore there. So yeah, the only way you could catch this one is just waiting for the first change of character and another break on the 1 second. Now you can do this on any time frame. The market is fractal, and as you can see, the price action that happens here, this is also just a clean entry model with a fake charge, a sweep, then another charge, pullback, again another confirmation, and a sell-off. And yeah, from there you can target. You can look to target lower points on the high time frame, for example, because you can see there's a lot of imbalance over here. So you could easily target way lower. As you can see, it's selling off. Already 15R. And that 15R happened in basically in 25 minutes. You managed to back a 15R trade there. So yeah, that's very crazy. But that's also the power of the seconds time frames. Because you are able to refine your entries that much that you get such a small stop loss. Because you will see the stop loss was only 0.8. It was only 1 pip. So yeah, that's it for now. You can see the rest got taken out, or yeah, the trade got taken out. You could of course target. Your first target will be after this break, a 0.5. Again, premium and discounted. So let's mark out from this impulse, from the downside over here to the upside, 0.5 over here. So from the higher time frame perspective, when it taps this golden zone, 0.5, 0.618, there's a possibility it reverses, and so that's also why you want to take profit over there. So if you don't right, you would have taken profit for 12R. And basically, in basically 20 minutes. So this can be your whole week done in literally 20 minutes. Like if you risk 1%, let me get my drawing tool for now. If you risk 1%, and you, for example, take profit, you take partials over here at 5R. So basically that's 2.5%. 5R. But you take half off, so it would have been at 5% here. You take half off, you take 2.5% win on your account, and you still have half of your position running, aiming for this 12R trade. And as I'm a mathematical wonder, I'm not sure what it would be totally, but yeah, it would be like maybe like 4 or 5% up. I think at least 5% up when you take profit at this 12R. So basically, yeah, 5% in 20 minutes. That's crazy, and that's what everyone would sign for. Like you will be done for the coming couple of days, just taking this one trade. And of course, you have to wait for your setup. Maybe that time you count that in too. But still, it's this strategy is so effective and it can be so profitable. So yeah, that's basically it. That's basically what I wanted to tell. I hope you guys learned a lot from it, and I'll see you guys on the next video. Don't forget to like and subscribe. Place some comment on the video, because that will also help us grow our channel. And as our channel grows, we will be able to, yeah, of course, send out more free videos for you guys. So yeah, I hope you learned a lot from it, guys, and I'll see you on the next one. Ciao, ciao.